Companies such as Apple and Microsoft had lost trillions of dollars in market value in 2021. What is the underlying reason for this phenomenon in the technology capital market?
Nobody likes a bear market. Bear market simply means prices have gone down. I guess it's more technically, it's supposed to have gone down more than 20%, I think. But the world and the U.S. changed when the Federal Reserve began to raise interest rates. We had zero interest rates in the U.S. most recently because of COVID and fear that COVID was just going to crash the financial system and the economic system. When the Fed moved to 0% interest rates, it was to stimulate the economy, and it certainly did that. I mean, all of a sudden people had more money to spend, and they could buy things, especially say real estate, and put down a little bit of money, but get a loan for very little interest. And, I think it really is in the US and lots of parts of the world. Yes. Those big companies, people often say they're technology companies. I don't look at them all as technology companies. I look at Apple as somewhat of a technology company, but also more of a consumer goods company, right? I mean, we all have these things right now. I mean, I don't go anywhere without them. I even have my wallet in the back of my phone. So anyway, I look at Apple as a consumer goods company. I look at Amazon as really a conglomerate of different companies. You got everything from, supermarkets, grocery stores, to cloud computing, and everything else in between, distribution. It's huge. So is it a technology company? They don't make any technology. It's more of a marketing company. And Tesla is a car company. There are other electric cars. Does that make all car companies tech company? Anyway, I'm preaching to the choir probably, but they're all down significantly in price for several reasons. I mean, the primary reason is the Fed started to raise interest rates and making it more expensive to borrow. And the reason for that is the Fed's mandate is to keep inflation low or under control. And with COVID and interruption in supply chain, interruption in manufacturing, inflation took off. I have friends who need to buy a new refrigerator. Their old one broke, and they, 9 months to get a new refrigerator. Nobody wants that. So, I think the reason why this group was targeted specifically is a couple of things. One, they're the largest companies in the US. Two, their valuations, the valuation of their securities were elevated. They weren't crazy high like we saw in, the year 2000 or 2001, but, they were elevated at a higher level. And also these companies are high growth companies. They're growing very fast, but a lot of when you buy a company, you're not only buying it for what it's going to do today, you're also buying for what it's going to do tomorrow. And the outlook for these companies was very strong, that they were going to continue to grow or even accelerate growth in the future. Well, with interest rates up, a lot of that is put on hold. If the economy is because of higher interest rates, if the economy is softening, is weakening, less certainty about that future growth, less certainty about current growth as well. Are people going to buy as many of these things? I think they are. My kids, if they lose theirs or it breaks, they go crazy. They go nuts. They can't, they want a replacement the same day. And I think the same goes for a lot of things. So, I think these are still extremely strong companies. I think they're now extremely undervalued. Yes, their growth rates have moderated somewhat, but when the economy returns to normal, when interest rates come back down, not to zero, but to a more sustainable rate, these companies are going to appreciate significantly.